Target is the latest store to announce it's likely going to raise prices due to President Trump's tariff.
First, it was Walmart last week. Now Target is warning customers to be ready for higher prices.
Target, one of the nation's most beloved stores, is fighting for its very survival as it faces a perfect storm of economic pressures. President Trump's sweeping tariffs have sent shockwaves through the retail giant, causing sales to plummet by a staggering 5.7% early this year. Behind closed doors, Target employees are watching in horror as prices skyrocket overnight. Phone charges jumping 80%, toys increasing by $40, and basic items doubling or even tripling in cost. The retail giant that once promised "expect more, pay less" is now forced to raise prices dramatically while slashing employee hours. Target's stock has collapsed by over 37% as the company desperately tries to reduce its dependence on Chinese manufacturing, from 60% in 2017 to just 30% today. But is it too little, too late? With court battles raging over the constitutionality of Trump's tariffs and economists warning of a $1,200 annual tax increase on every American household, Target stands as the canary in the retail coal mine. Today, we expose the shocking reality behind Target's struggle, reveal insider reports from employees fearing for their jobs, and investigate whether we might actually witness the unthinkable, the extinction of the iconic red bullseye from America's shopping centers. The answers will not only determine the fate of 400,000 Target employees, but could foretell the future of American retail itself. The story begins in early 2025, when President Trump, just weeks after returning to the White House, signed a series of executive orders that would reshape America's retail landscape. On February 1st, 2025, Trump announced sweeping tariffs, 25% on goods from Canada and Mexico, and 10% on imports from China. For most Americans, these tariffs sounded like distant economic policy, but for retailers like Target, they represented an existential crisis in the making. By April 2025, Trump had expanded these policies, imposing a minimum 10% tariff on all US imports, with higher rates for dozens of specific countries. For China, a key source of Target's merchandise, tariffs eventually rose to 20%. The impact was immediate and severe. In May 2025, Target reported that sales had plummeted by 5.7% in the first quarter of the year. This wasn't just a small dip. It was a warning sign that flashed in bright red across the retail industry. Why was Target hit so hard? Unlike its main competitor Walmart, which generates most of its revenue from grocery items, Target relies heavily on non-essential goods: home decor, beauty products, clothing, and electronics. And here's the critical detail: a substantial portion of these products come from China. Brian Cornell, Target's CEO, didn't mince words during an earnings call in May. "We're not satisfied with these results, so we're moving with urgency to navigate through this period of volatility. We've got to drive traffic back into our stores or visits to our site." The math is simple but painful. When a retailer like Target imports a product with a 30% tariff, someone has to pay that extra cost. Either the company absorbs it and hurts its profits, or it passes the cost to consumers through higher prices. By early June 2025, Target workers began sharing evidence of dramatic price increases across stores. On Reddit, one employee in the toy department reported, "We had about 600 price changes in the last couple days. Everything went up. Most things went up $4, but the bigger toys like RCs and hoverboards jumped a whole $40 to $50. Photos began circulating online showing price tags being replaced. A $9.99 phone charging cable now priced at $17.99, an 80% increase. A children's ring stacking toy that had been $5.88 was suddenly $19.97. These weren't isolated incidents. Target's leadership had warned this was coming, though they tried to frame it carefully. Rick Gomez, Target's chief commercial officer, said the company would be looking at different ways to offset those costs, including shifting sourcing away from high-tariff countries like China. But the reality on store shelves told the true story. Target was raising prices, and consumers were noticing. Behind the scenes, Target's employees have been living with growing uncertainty. With sales declining and costs rising, the company began cutting hours, a common first step before more drastic measures like layoffs or store closures. One Target employee shared on social media, "Everyone's hours are getting cut, and they're not coming back as we progress into spring, like they did last year. A lot of people don't seem to be getting it just yet." Another employee expressed the emotional toll of implementing price increases. "Been doing price change every day for the past 4 months or so, and seeing everything going up all at once is really making me sad. I just feel terrible putting all these ridiculously high prices up." The anxiety isn't limited to hourly workers. In May 2025, Target announced a significant leadership shakeup, with Chief Strategy and Growth Officer Christina Hennington stepping down, a move that retail analyst Neil Saunders described as a tacit admission that Target isn't doing a good enough job in some areas. Even more telling, Target created a new office led by Chief Operating Officer Michael Fidelke focused on faster decision-making to help accelerate sales growth, a clear sign that the company is scrambling to adapt to the new economic reality. So, how is Target fighting back? The company has launched a multi-pronged strategy to weather the tariff storm. First, they're diversifying their suppliers away from high tariff zones. Target has been steadily reducing its reliance on Chinese-made goods, bringing it down from 60% in 2017 to 30% currently, with plans to reduce it further to 25% by the end of 2025. They're also carefully balancing their pricing strategy, selectively raising prices on certain products while absorbing costs on others to remain competitive. As CEO Brian Cornell explained, "We're constantly adjusting pricing. Some are going up, some will be reduced." Target is negotiating aggressively with suppliers to share the burden of increased costs. Some Chinese suppliers have reported that Target asked them to pick up half the costs of the tariffs, a move that hasn't been well received by all parties. One supplier told business publication Quartz that when they tried to negotiate with Target on this point, the retail giant simply stopped doing business with them. Additionally, Target is investing in efficiency, upgrading forecasting tools, warehouse automation, and logistics to offset higher sourcing costs. Perhaps most visibly to consumers, Target announced in May 2025 that it would offer 10,000 new items starting at $1, with the majority under $20, in an attempt to maintain its image as an affordable shopping destination. This story affects all of us, whether you're a Target shopper, employee, or just someone concerned about the economic direction of our country. If you're finding value in this analysis, please take a moment to like this video, subscribe to The New Diplomat, and share it with others who might be interested. Your support helps us continue bringing these important stories to light. Now to the question that many are asking, could Target actually shut down? Could we see the iconic bullseye logo disappear from the American retail landscape? The short answer is that while Target is certainly struggling, a complete shutdown of the company's nearly 2,000 stores nationwide seems unlikely in the immediate future. However, the company has already drastically cut its expectations for the year. In May, Target revised its annual sales projections from a 1% increase to a low single-digit decline, a significant downgrade that rattled investors. Target's stock has fallen more than 37% over the past year, reflecting deep investor concerns about the company's future. This drop in value makes it harder for Target to raise capital and invest in the innovations it needs to compete in today's retail environment. If the tariff situation doesn't improve, we could potentially see Target closing underperforming stores, significantly reducing its workforce, or even becoming an acquisition target for a larger company or private equity firm looking to restructure the business. What makes Target's situation particularly precarious is that it faces multiple challenges simultaneously. Beyond tariffs, the company has been caught in cultural crossfires over its diversity, equity, and inclusion policies. In January 2025, Target scaled back many of these initiatives after criticism from conservative activists, only to face backlash from other customers disappointed by the retreat. Target's struggles aren't happening in isolation. They're part of a broader economic story playing out across America. The Trump tariffs amount to an average tax increase of nearly $1,200 per US household in 2025, according to the Tax Foundation. That additional cost is being felt not just at Target, but across the retail landscape. Economists at the Penn Wharton Budget Model project that Trump's tariffs could reduce GDP by about 8% and wages by 7% over the long run. For a middle-income household, that translates to a lifetime loss of $58,000. Reuters reported in May 2025 that President Trump's trade war has cost companies more than $34 billion in lost sales and higher costs, according to their analysis of corporate disclosures. That number is expected to rise as the uncertainty over tariffs continues to paralyze decision-making at some of the world's largest companies. The situation remains fluid. In late May, a U.S. federal court blocked most of Trump's global tariffs after ruling that the president's actions were unconstitutional. However, an appeals court quickly paused that injunction, leaving retailers like Target in continued uncertainty. So, what does the future hold for Target? The most likely scenario is a period of painful adjustment. Higher prices, fewer employees, possibly some store closures, and a shift away from the expect more, pay less promise that built the brand. Target is betting heavily on its ability to reposition its supply chain away from heavily tariffed countries. If it can successfully shift sourcing to countries with lower or no tariffs, or even back to domestic production, it may emerge stronger and more resilient. For consumers, the reality is that the days of ultra-cheap imports may be ending, not just at Target but across American retail. The question becomes whether shoppers will accept higher prices as the new normal or reduce their spending, potentially triggering a deeper economic slowdown. For Target employees, uncertainty remains the only certainty. The company that employs more than 400,000 people nationwide is fighting for its future in a rapidly changing economic landscape. And for policymakers, Target's struggle represents a real-time case study in the impact of tariff policies on American businesses and consumers. The debate over whether tariffs ultimately help or hurt the American economy is playing out on store shelves and price tags across the country. As the New Diplomat, we'll continue to monitor this developing story and bring you updates as Target navigates these turbulent waters. The retail giant's ability to adapt, or failure to do so, will tell us much about the future of American retail in this new era of trade policies. Thank you for watching. If you found this analysis valuable, please remember to like this video, subscribe to our channel, and share it with others who might be interested. Your support is what allows us to continue bringing you these in-depth examinations of the policies and events shaping our world. We'll see you in our next video that appears on your screen.